Hello, everyone. Welcome. This is Gray Pendleton. It's my pleasure to present our economic and market update and year-end proactive tax planning for 2024 workshop. So, always like to start with, knowledge is power. At our firm, we partner with clients. We believe an educated client is our best client. While we always try our best to help you with your finances, we believe that knowledge is power. One of our missions is to share any knowledge with clients to help them make an informed decision. So we're out here to help you. As you can see from the charts, while the third quarter ended with a strong result, the 3-month period was not a smooth ride by any means. Volatility remained prevalent for investors. August was the S&P 500's most volatile month in nearly 2 years after several factors, including weaker than expected jobs data from July, thus increasing recession concerns. However, equities regained most of their losses by the end of the month after taking another dip in September. Once again, we're in record-breaking territory by the end of the quarter. For the 3-month period, the S&P 500 rose 5.5% and closed the quarter at an all-time high of 57.62. This brought the year-to-date gain for the S&P 500 to nearly 21%. The Dow Jones had a year-to-date gain of 12%. For long-term investors, the 3 quarters of 2024 have been great. Note that you got to diversify your portfolio, so you don't only want to be invested in one asset class. What did the best this year may not be doing the best next year. So you want to maintain a diversified portfolio, which certainly we do for our clients. In August, the year-over-year consumer price index was 2.5%. This is the lowest annual increase since February of 2021. This suggests that the Fed's 2% inflation rate could be met in the near future, potentially. The core CPI, excluding food and energy, was 3.2% year over year, slightly higher, so that is a bit of a concern. The much-awaited first interest rate cut since the onset of the pandemic happened in the third quarter. On September 18th, they lowered the federal funds rate by 50 basis points. Hard to believe that was just a few months ago, down to a range of 4.75 to 5%. This ended a 23-year high for interest rates. The stock market responded very favorably to this rate cut. The Dow Jones reached a high. Starting the year, it was anticipated that we could see 3 rate cuts in 2024. As of the third quarter, we have only seen 1 rate cut. There are 2 more scheduled FOMC meetings in 2024 and in November and December. In the Fed's September economic forecast, it was suggested that additional rate cuts may be coming this year. Interest rates and inflation are integral to investors' financial planning, so we'll continue to monitor on those updates. Treasury yields have shown a downward trend. The inverted yield curve ended in September, so that's been great, after a record 793 days. As of September 30th, 5-year Treasury notes yielded 3.58%, 30 years were 4.14. We'll continue to monitor these and keep you abreast as any changes. Safety does, it comes at a cost, right? Major banks are still offering very low rates, which is crazy, half of 1%, So if you have cash on the sidelines, you want to keep it in cash, let us know. We have certainly better options for cash earning between 4.5% and 5% right now. So there's still a lot of uncertainty in the world and economy. We're still experiencing a bull market. Began in June of last year, rose 20% from its October of 2022 low. Many investors are speculating about how long this bull market can last. While previous performance is not an indicator of future results, historically the median bull market lasts about 46 months or 3.8 years. So as of September, it's only 21 months old. While many analysts remain optimistic that we will continue to experience this record-breaking rally, several volatility-inducing events are waiting in the wings, including the U.S. elections, continued geopolitical risk, and lots of other little things, right? So inflation and volatility is going to continue to be a concern moving in the coming months. The global economy experienced continued uncertainty during the third quarter. Global tensions persisted, including the heightening conflicts in the Middle East and the ongoing Russia-Ukraine war. As you know, we are currently also experiencing a presidential election that's highly contentious. Please remember that statistics show us that over long periods of time, economic and inflation trends affect equity markets more than the election results. Because this is an unusually raucous election, we cannot overlook the potential of a short-term election aftershock in the stock market. Regardless of who is elected, both candidates have proposed changes in tax rules and economic policy, leaving much uncertainty. While earnings in the economy are the main drivers of financial markets, we are committed to keeping you apprised of any changes we feel could affect your situation. Currently, the U.S. economy continues to show signs of strength and resilience. The hopes of a soft landing coming to fruition is growing, and talk of a recession is subsiding. While it still could be a CERN, it's looking hopeful. The Fed has deflected at least a hard recession. This is a good time to remind you of a quote from Yogi Berra, where he said, "It's tough to make predictions, especially about the future." Now, as always, is a time to stay focused on your personal objectives. One of our main goals is to help our clients create a solid financial strategy that considers their risk tolerance, time horizon, and potential tax implications. We believe in proactive preparation and providing clients with a resilient financial strategy. It's important to consider equity investments from a long-term perspective. This is a good time to take a look at your investments and confirm they still align with your goals. Make smart investment decisions and monitor your expenses. If you'd like to review your investment strategy, we'd be happy to help you. So as a recap, equity markets closed out the third quarter with very solid results. The federal funds rate was reduced by 50 basis points. The Fed is anticipating possibly more rate cuts this year. Both the economy and the equity markets are strong. Volatility remains. Stay the course with your well-diversified long-term plan and be well prepared. A note about taxes. I know I mentioned taxes a little bit. The tax law changes are changing in 2026. Now, that's law. Whoever gets elected, the tax laws will probably change differently than the way they're expected to. But what's going to happen in 2026 is they're going to revert back to the old tax rates back before the 2017 Tax Cuts and Jobs Act. So it's likely that if we see a Trump winning, that those 2017 Tax Cuts and Jobs Acts will stay, but they're probably going to be changed to a degree either way. If Harris becomes president, probably going to be looking at more significant changes. So just something to be aware of, that tax laws are going to be changing in 2026. And there's always a potential for 2025 as well. Whoever wins, they could always come in and when they enter office in January, they could potentially make retroactive tax changes. So something to be aware of. We'll continue to keep you, ahead of the situation. We're grateful for our clients. We value the opportunity to accompany you on your financial journey. Our goal is to assist more people like you. The greatest compliment we can receive is a referral. We love referrals, so thank you for taking, placing your trust in us. Invite folks to a presentation. Send this video off. Add them to our mail-in list. We're happy to meet and have a discussion with anyone, and everyone always gets a good takeaway from our talk. So thank you so much for your time today. It was a pleasure serving you, and I look forward to chatting with you soon. Thank you so much. Take care.